I don't think there's anything in it that was going to surprise anybody. The government had always said that it was going to remain with a firm commitment to achieving surpluses. It's done that. If there are question marks over it, clearly when you're looking at a very, very small surplus, it doesn't take much to turn that into a deficit. Yeah, so you don't really want to get too excited about whether it's a surplus or a deficit, frankly. And possibly Treasury's being a little bit overly optimistic in terms of its growth profile.
Okay, so maybe look towards the downside scenario a bit, maybe a midway point?
Yeah, I mean, our own central scenario is very close to Treasury's downside scenario in terms of the actual numbers. And if Europe imploded or China really became unstuck, then we'd have further downside over and above that. So, I mean, their downside scenario relies on a Chinese or European upset, which suggests that you probably get there without it.
Right, sure. And in terms of the interest rate track, a bit optimistic then on that track?
Well, I think their interest rate track is entirely consistent with their growth track. So if growth doesn't turn out as strong as they suggest, then interest rates will not turn out as strong either. Having said that, their interest rate track is not that different to our own, because we don't believe that this economy is capable of growing particularly quickly without creating inflation, and we don't believe that productivity growth is likely to be exceptionally strong. The Treasury's own assumptions are for 1.4% per annum productivity growth, which is well above what we've experienced over the last few years.
Well, you know, it was the sort of budget that was largely expected. There was a lot of marketing talk in there, but nothing really happened. But the concern for us is that nothing really happened. They didn't touch on superannuation, which is a long-term issue. They didn't look into things like the size of government spending. What they did do was they increased taxes. When you saw taxes increase like that, they're saying, hey, over the long term, we're going to let government spending be a bit higher. We're going to let the scope of government be larger, and we're going to keep investing a lot. Okay? Government investment as a percent of GDP in that would have kept going up. They don't seem to have a consistent long-term plan for that.
Whereas National sort of wants to get the government out of the economy.
Well, it doesn't seem like that. They're talking about continuing to lift the size of government in terms of investment. In the long term, that will crowd out private players. They're saying we want more and more of investment in the economy to be determined by government. That's what's coming out of there, and we don't think that's a consistent long-term plan from them.
Okay, and the interest rate track is obviously still pretty favourable compared to the Reserve Bank's track. What do you think about that?
To be fair to them there, they've got reasonable growth in there, and they've got a high terms of trade. So that high terms of trade, it comes right back, will be pushing up their interest rates. If we saw commodity prices struggle, they've got scope in there for interest rates to be a bit lower.